Well, when you look at the last 15 years, Kenya has made tremendous steps in ensuring that the unbanked have access to financial services, and this has been achieved through multiple platforms, and one of them, which has been the most successful and which has been studied by the world over, including by Stanford University in the US, is the mobile money platforms. It's a model that started way back in 2007. It is now a mega economic enabler. The other model is around the SMEs. If I can give you some data, SMEs, they account for about 98% of all jobs in the country. Their contribution to the Kenyan economy is about 25%. And so this is what you call a critical mass, a critical segment that cannot be ignored. And so the question is, how do you move the SME sector from their contribution to GDP of 25% to about 50% in the next 10 years, which is possible? And how do you make it easy for SMEs to access credit? Well, I'm talking to Kim Kariuki. He is a consultant with Microsafe Consultancy, and he's going to help us with some ideas on how these can be achieved. Kariuki, thank you very much for your time this morning.
Thank you very much for having me.
Very good. First of all, why is it so hard for SMEs to access financing in Kenya?
Good question. I think it was really hard initially because MSMEs were misunderstood. So you talked about M-Pesa as we were beginning this, and one of the true drivers of M-Pesa was just understanding the value proposition, understanding why it is important for Kenyans to send money to each other, why it is important to ensure that internal remittances remain consistent and grow over time. Mm-hmm. And I think if we could apply the same level of innovation and product focus onto MSMEs, then we find a shift in how SMEs are being served. So initially we couldn't understand MSMEs because we didn't have a good sense of who is the SME. Are they likely to collapse? Are they dealing in illicit trade? We don't quite understand. If we don't understand, it's harder for the financial institutions to come in and accelerate their activity. But now over time, with the advancements in innovation, with the advent of digital technology, it's becoming easier to connect with the SMEs, to appraise the SMEs, to disburse loans to the SMEs. Mm-hmm. So now I think the narrative has shifted. We're seeing more SMEs engaging with different platforms by the public and the private sector.
Mm-hmm. And the most interesting thing is the fact that, just credit to SMEs is not a challenge, not only here in Kenya, but the world over, because when you look at the United Kingdom last year, for example, their lending to SMEs fell by 14 billion pounds in the last 1 year. That's a significant number. And so why are SMEs considered to be at risk by financial institutions?
One, we don't quite understand who the SME is, what's driving the SME. There's a study by CIGAP, and it showed that for us to effectively work with SMEs, we really need to segment them. We need to know what drives them, who they are, what is the aspiration of the SME. So if I give you an example, take your mama mboga, who might be what we call an opportunistic entrepreneur. She started the business because she is trying to supplement her income, because perhaps her husband has an inconsistent income, and so she needs to top up. Her attitude towards business is very different from, say, a young person who is coming into business. He's a hustler. He wants to survive. He wants to thrive. He wants to grow. He has ambitious goals and dreams. And sadly, when both of those would approach conventional financial institutions, they'd be told no. But now with digital, it's easier for the financial institutions to find them, to appraise them, to understand them, to know what drives them, and then ultimately to give them credit that can help them grow their business.
Mm-hmm. And when you say that we do not understand who the SMEs are, what exactly do you mean?
Let me make the point slightly differently. In Kenya today, 2 out of 10 Kenyans are listed at the CRB. So 2 out of 10. So, if we're 10 people here, we can look around and figure out who those 2 are. So those two people may be listed for very different reasons. I lost my job, but I had borrowed some money. I haven't been able to repay. I've been blacklisted. I took a loan on behalf of my cousin who wanted to start a business. My cousin wasn't able to pay. I was repossessed because I was a guarantor of the loan. I'm in that 2%. So a similar thing is happening with MSMEs. Unless we know who's trying to achieve what, where each MSME is trying to go, what sector are they involved in, which value chains are they playing at, it becomes harder for us to design solutions that are targeting MSMEs effectively for them to scale.
And also when it comes to lending to SMEs, when you look at the interest rate charged to SMEs by lending institution, it's significantly higher than to individuals for personal loans. And this is because of their risk profile. And so how then do we address the issues of risk? How do we risk the SME industry in Kenya?
Yeah. So de-risking is a very good question, and it's a top of mind for everyone in government and also private sector and funders. And I think we need to look at it from both sides of the equation. So on the demand side, where these MSMEs lie, like we said, we don't know who they are. We need better tools to appraise them, to understand their income cycles. And digital is helping because we can develop a blueprint of their financial inflows and outflows. We can understand how effective they are at their business, and we can assign them a credit risk. So that's one thing. But I think when you look at the macroeconomics of a country like Kenya, for example, where our dollar is under pressure from increasing rates of increasing inflation, dollar shortages, etc., the dynamics are such that the amount of money that's available for financial institutions to on-lend to SMEs comes at a very costly premium. So unless we look at the scenario on both sides, unless we try and address the supply side and the demand side, we find that our solutions will be half-baked. We can only reduce the cost of the loan to the SME to the level to which we can get to the cost of capital. Digital can help us take it lower, but if I'm already borrowing from an expensive source, then I have to pass the cost along to my consumer. And so we need to address the issue on both sides.
So how do you then rebalance the supply versus demand market to ensure that the cost of credit to SMEs is fair enough?
Sure. Again, now that has different levers. So let's take a country like India that got frustrated with the high cost of lending to agricultural sectors, that it then mandated that any lending that happens to productive sectors has to be done at a minimal interest rate. So that was a very top-down directive that ensured that MSMEs, households that are accessing loans for farming, which is a big mainstay for agriculture, for our economy in Kenya, for example, could access loans at much cheaper rates. So on the one hand, government has to play a role. On the other hand, the financial institutions also need to do their bit, and there's space for a good number of them to incorporate innovation, so digital lending, credit scoring, etc., to minimize the requirements for loan appraisal. So Tindi, who was just here earlier, talked about the fact that women and young people don't necessarily have collateral, and so they can't borrow if easily or cheaply. But if they can be scored, if we can develop a model that shows how likely somebody is to repay, then we'll bring down that cost of borrowing, and MSMEs will benefit. So I think the government needs to work with the private sector to explore how can we reduce the cost of productive lending, because this is where these MSMEs are playing. India and other countries have done it successfully, even though that was a very top-down directive. Harder to do in private sector-led markets like Kenya and much of East Africa, but it's not impossible. We just need to think about the market dynamics. How do we deliver the credit effectively, and how do we not cause distortions?
So I want you to give us numbers. For example, if 10 SMEs apply for a loan, how many will be successful?
Very good question. We're talking about MSMEs like they're contiguous, so let's break it down. There's a micro, there's a medium, and there's a small. If they're applying digitally, let's say via Hustler Fund or M-Pesa, Fuliza, etc., their chances are pretty good because they've been appraised, they have been scored, they've been assessed. So they may not get a very high limit, but at least they'll get halfway down the line. They'll get enough to start. And we applaud the government's efforts on the Hustler Fund and other similar initiatives that are looking to graduate borrowers. If you look at the small to the macro side of things, those probably will have more to offer financial institutions. Those don't need to rely necessarily on digital, although they are welcome. But they can comfortably approach a tier 2, a tier 1 lending institution and receive a credit facility. They may be more sophisticated, they may have assets, they may have a credit history. So when you look at a number of what the fintechs are doing in this market, it's helping those nano entrepreneurs, helping those small entrepreneurs develop a credit collateral that's digitized, that's based on their repayment patterns, their behavior, so that they can compete with the small and the bigger types of MSMEs. Yeah.
And the reason why the government is also getting into the credit space is because, for the longest time, the MSMEs, have been the most affected when it comes to lending. And that's why we have facilities like the Hustlers Fund. But is this enough from the government? And should the government get into the business of lending?
Very good question. First off, let's step back and look at what the government's role is. So the government is to facilitate and to enable a private sector market to thrive. We think, though, as well, the government has a space to play if the private sector, if there are inefficiencies, if the government can't make it possible for the private sector to operate, then we're all in trouble. So I think the answer is yes. There's a space for the government to play. I think the government has to play it well. I think the government has to play it in partnership with the financial institutions and the private sector so as not to crowd them out. Yeah. So something like the Hustlers Fund, was timely for different reasons. One, it's a great graduation mechanism for your first-time borrower who's not sophisticated, who doesn't know what they're doing, to get some credit, start doing some business and scale up. It's also been accepted well by the financial institutions that are supporting it, and others who've come up and said, if you successfully repay your loan via the Hustler Fund, we will absorb you into the more formal market, which is a very positive development. And I think that's what we need to see more of. And I think what we need to do is to support the government and find ways to provide a lot more private sector engagement. So, one of the beauties of, let's take, for example, M-Pesa that you just mentioned a while ago. Initially when M-Pesa was just first started, the ecosystem was fairly closed. Now, I think they saw the beauty of opening it up, and now everyone's integrating it into M-Pesa. So a bank, you can make a bank-to-person transfer. You can pay a merchant. You can do all these extra things riding off the M-Pesa platform, but the M-Pesa platform remains what it is. So I think what we should be thinking about is how do we work with the Hustler Fund or with the mechanisms that the government has set up, the agricultural subsidy program, what have you, to accelerate economic development and development for MSMEs.
And so then how do we ensure that, the lending institutions in Kenya stop seeing SMEs as a risk to their business and ensure that there is a balance between ensuring that they take care of their risks, as well as ensuring that SMEs are supplied with the finances that they need?
Yeah. It's interesting. I think it's one of those situations where most of the financial institutions, I won't say all, but most of them have at least a portfolio that's lending to SMEs. Now, because they've realized what we're talking about, the 98%, the fact that these MSMEs are with us, they are growing, they're in productive sectors. So most of them are lending to them, but not necessarily with specialized products. So, if you take, let's say, an MSME who is trading in the tea business, it's very few financial institutions that have the leverage to give that MSME enough liquidity to withstand periods where there'll be no revenue. So most of the financial institutions are beginning to make inroads and have been making inroads. The bigger ones who are more capitalized are doing more. But I think it's a place of, also as an MSME, looking at the options, weighing your options, and figuring out which solution, which partner, which financial institution is willing to walk with you down the journey. So we're privileged at Microsafe to work with a number of financial institutions, both in Kenya and outside. And the thing that we are we get surprised by every single day is the number of financial institutions who have unique programs, accelerator programs, incentive programs, and we see them in the media being published every day. This bank has received this amount of money to support women SMEs. This other institution has done this. So there's a lot that the financial institutions are doing and will continue to do because they see the value case. I think there is a misinformation gap. So MSMEs are not too sure where to go to, and that confounds and complicates the issue as well.
Mm-hmm. And then, so how do MSMEs, fashion themselves to be credit-worthy?
Mm-hmm. So I think part of the work is being done through tech. So we talked about digitization, we talked about these fintechs that are helping mama mbogas, everyone digitize and develop a digital footprint. I think as well for the MSME, it's also about appreciating what do you bring to the table. And I think there's a philosophical side of this that says perhaps we should even start at education level. We should start teaching people the fundamentals of business so that when should they come to a place where they want to be entrepreneurs, they know what they're doing. But I think it's also in empowering the MSMEs to really appreciate what they bring to the table. I think we know they exist, but we've somehow conveniently put them to the side. I think in our national psyche, we need to be proud of our SMEs like they are in South Africa and elsewhere. We need to be proud of the fact that we have hustlers. Hustlers shouldn't be, aside from the political connotation, shouldn't be a dirty word that has negative connotations to it. It should be something that we are proud of, because if we all then have a positive national psyche around our entrepreneurs, then it's going to be a lot easier for us to develop solutions that speak to them.
Mm-hmm. In the countries that you work with as Microsafe, do you have a lending model for SMEs that has worked?
So we don't develop lending models ourselves. We work with partners, and those partners develop their lending models. So across the continent, yes, there are a number. Some of the top tier banks in Kenya are using some of those models. We've been very fortunate to work alongside one of Kenya's largest banks in the very early days when they were just figuring out the market. We handheld them, capacity built them, taught them about product development, showed them the opportunities for digital and helped them get into that agenda. And we have colleagues across our business too who specialize in digital transformation. So those models work, and we've seen them work in Kenya, we've seen them work in Ethiopia, we've seen them work in every part of the world that we're in. And it's really exciting when we see credit being unlocked to a consumer for the first time, them getting their first loan, them being able to successfully repay their loan and graduate up.
Mm-hmm. Yeah. And when you look at other SME sector, which sector is regarded as having the highest risk when it comes to accessing credit?
Very good one. So most of the Kenyan MSMEs are in the retail space. So those, if you can demonstrate some fair level of liquidity, you will get a loan. Yeah. And if your business is well understood with your financial institution, you will be able to obtain credit. So there are smaller sectors, fisheries, mining, that we have MSMEs playing, but because we don't quite understand what they're doing, it's harder for them to get a loan. So let me give you an example. I'm an SME, I walk into a big financial institution, I say, you've never met me before, I say I want to open a business in Turkana to help the companies that are in Turkana who are drilling for oil, and I need $5 million to set up the business and buy the equipment to maintain those machines. Very likely you'll be laughed out of the room and be told, you first go secure a tender, go do this, go get a sponsor. You'll be given a whole list of requirements. And so, part of what we are saying is, if we understand the sectors in which they're in, if we can make deliberate connections, and the question is, whose role is it? Is it the MSME? Is it the government? Is it a development partner? But I think what we need to be mindful of is we need to create those connections so that the sectors that are not well understood are understood. There was a time, if you wanted to get money, let's say to open a retail shop to sell Omo and Kimbo, you couldn't get that money because the banks then didn't understand what is OMO, what is Kimbo, will you be able to repay the loan? Forget it. So back then, Unilever today, which was East Africa Industries then, used to use their own working capital to on-lend to stockists to help them stock. Today, if you walk into any of the big banks and say, I want to stock products for Bitco or for any other manufacturer, Unga, they'll say, hey, fantastic, welcome. Tell us about what you're looking to do. So we need to be deliberate about creating those connections, those relationships, but also understand that it takes time.
Mm-hmm. And which sector carries the lowest risk?
It's a very good question. I'm curious if that actually has been studied, and I'd love to research on that and come back to you. But I think the sectors that would generally carry less or least risk are those that are best understood. So I've given an example of retail, where we know what's happening, especially fast-moving consumer goods. Those generally tend to be easier, in quotes, easier to apply and get loans because people understand the product you're selling, they understand the market, they know there's proven demand. Sectors where that's not quite clear, we have challenges. And so I think that's the point that I'm making of being able to understand the sector, because today it might be mining that is risky, or forestry, or agrofisheries. But for example, the agrofisheries, it might be risky to us in Nairobi, but down by the coast, people understand that industry. And maybe for them, agrofishery isn't risky at all.
Mm-hmm.
Yeah.
Very good. Well, if you're just joining us, we are having a very interesting conversations on how to de-risk the SMEs industry in Kenya. They are regarded as highly risky when it comes to lending by more so by commercial banks, and so even when they qualify for credit, they are priced differently. For example, if you, as an individual, you want to apply for a personal loan, and on the other hand, you have an SME who wants to apply for a business development loan, then you find that you pay like the SME will pay more for the credit, probably maybe by about 4 percentage points than you. And so the question that we're asking here is then, how do we lower the risk profile of SMEs in this country? And we're having this conversation with Kim Kariuki. He's a consultancy expert, and he works with Microsafe Consultancy. He's here in studio. He's helping us to understand this concept. And so if you are an SME, I think the next question is going to be very, very helpful to you, because I want to find out from Mark. Then as an SME, then how do you fashion yourself in a manner that, you know, your loan, what do we call this?
Your loan limit.
Application.
Loan application.
Your loan application will be favored by commercial banks. How do you do that?
Very good question. I think the first starting point really has to be you as an SME owner. How do you present yourself? So you've talked about, you know, personal loans being cheaper than business loans, and to some extent that is very true, and that's the lived experience of many people. But then it's also about that lending officer probably understands the product that he's offering to you as an individual better than he understands the business that you're trying to get into. So I'll give you an example. If I come to a financial institution and I say I want to buy a car, it is KDF 123X, here's all the paperwork. The financial institution has already developed mechanisms around verifying the seller, verifying the logbook, making sure the taxes are paid. So really all he's trying to see is, do you have matching income that can meet whatever minimum repayment is here? And of course, I'm oversimplifying the credit administration process. He's trying to check, are you able to repay? And if not, can I sell the car if you're not able to? And that's a match made, there you go. Right? Now, when it's a business, the conversation is slightly different. So I need to understand you as a business owner. I also need to understand your business. Who are you dealing with? Are you supplying to entities that pay you? How often do they pay you? Have you had any business disruptions? Have you filed for bankruptcy? So the due diligence that the financial institution has to do for an entrepreneur and their business increases. So because of that increase, and now we're talking about certificates of good conduct, verifying registrations, there's a lot of back-end administration work that now needs to happen just to accompany this loan appraisal. So that automatically adds a premium onto the loan. But with digitization, we could bring that down. But to your question of how do I present myself as an MSME, I think it's you knowing your business, you demonstrating your own personal character, and the government has done a good job of ensuring that the credit reports are available and accessible, so even as an entrepreneur you can see how you're rated, but also your business, because the institution has to buy both you and your business. Does your business have positive cash flows? Does it have a potential for positive cash flows? Does the financial institution have a relationship or a history with you? So there is an opportunity as well to start cultivating relationships with the financial institution. I think sometimes we go in naively thinking you'll walk into a financial institution and walk out with a 10 million shilling loan and you're happy to go about your business. In truth, it might not work that way. Mm-hmm. You might need to start with something small. So adjust your expectations with the reality of your business and grow with the financial institution. So many of the financial institutions today that enjoy repeat business from their customers, from their SME customers, and most financial institutions are exceedingly happy to lend to an institution that they know. And so if they've built trust with the financial institution, you as an MSME have built trust with them, they have built trust with you, you find loan limits, your loan approvals tend to be faster than if someone is just walking into the institution on day one and expecting a huge loan.
Mm-hmm. And also, I also understand that the SMEs that are lent by men, mm-hmm. They stand a higher chance of accessing credit, as opposed to SMEs that are led by women. Is this true? And if this is true, then how do you address that imbalance?
So it's interesting. In my past life, I used to work for a microfinance institution. And it's interesting, that's 10 years ago until today, the rhetoric is still the same. Women are better repayers of money. Especially individuals, they're better repairs. They have larger social networks to leverage from, they are more responsible, they are more truthful, and so that has been a consistent path. I think the access to credit for entrepreneurs, I think unfortunately is still pegged on availability of assets. What do you bring to the table? What do you have to offer? And I think unfortunately we're not at that point where we have gender parity in what women and men can bring to the table, or even in their knowledge of what is required and what they can ask for.
Mm-hmm. And so how do we rebalance that gender inequality in terms of access to credit?
Sure. So I know I've spoken digital a number of times. So I'll repeat that just for this one point, is that if done well, digital is unbiased. Mm-hmm. So part of the other thing that happens is, it's very likely, and there are studies that have been shown, if you are a male credit officer appraising a loan, you may appraise a man or a woman client differently. So I think with data, there's an opportunity to de-bias the information that's being appraised. So both men and women have a chance of getting an equal access to credit. I think for our sisters out there running businesses and they are thriving, I think my message to them is keep doing what you're doing. Keep doing what you're doing. It's what you tend to find is some of these things end up being industry corrections. Mm-hmm. So over time, and I think we're at that tipping point now where people are realizing, wait, women-led enterprises are doing well. We've seen a number of financial institutions creating specific value propositions just for women, and it's not just in Kenya, it's in Uganda and it's across. We've seen funders coming in strongly and saying we want to support women. We've seen the World Bank giving money specifically and other large donors to women-supported enterprises. So I think it's a correction that is happening. But we need to be mindful, or financial institutions and borrowers need to be mindful that, what's at play ultimately is the value that you're creating to your customer. So if the women entrepreneur can demonstrate that she's providing great value for her customers and she will be able to repay her loan, any financial institution will pick her.
Mm-hmm. Yeah. There was a report that was done about 5-6 years ago by Financial Access, and they were saying that out of 10 SMEs or startups, 5 will have closed their business by the time they celebrated their 3rd anniversary. The number will increase to 7 by the time they are clocking their 5th anniversary or their 5th birthday. And the number is likely to go up to around 8 or 9 by the time they're celebrating their 10th anniversary, and so you as a lender, then you have to be very cautious about who you lend to, because banks are not in the business of throwing away their cash. They're in the business of selling money, and so then how then do we structure our SMEs and we prime them for success?
Absolutely. I know it's interesting you said that about banks. Even SMEs, they're not in the business of, hey, let's open a business today, let's go through, and then you close. It's crazy. So I think it starts off with, you talked about birthdays, and I think I saw that report, and I think the situation got worse with COVID because COVID threw those statistics out the window. But I think it starts with helping us first take a step and appreciating what banks are now beginning to understand is that there's a graduation process. You can't take an 18-year-old who's just gotten their ID, very excited to use their phone, and give them a large credit limit. They likely will not repay. So similarly with MSMEs, we need to graduate them. In their first year of business, what do they really need? Yes, capital will be important because they have to pay their bills, they have to keep the lights on, etc. But they might need a lot more technical assistance, maybe access to markets. They might need a lot of business linkages to survive that first period. Just like when a child is born, I love my daughter, but when she was young, there was no way I could feed her ugali or anything else I was eating. We had to take all that food, mash it down, and hope she will eat it without throwing it off on our faces and do other things. So we need to take the building blocks of what we know it is required for sustainable business, access to markets, business linkages, business training, credit. We need to take these things and break them down and allow the MSMEs to graduate over time. So, those early businesses, and there's been work done by a number of foundations that are working in the entrepreneurship space, and they've seen, as MSMEs are in their first pivotal space, yes, credit is important, but they need to understand other things even more important, like their access to market, their value proposition. They need to understand pricing, their administration, because all of these are in flux. Someone can come and steal from the business. They're still trying to figure out their systems. As the business becomes a bit older, say from that 3-year period to 5-year period, it's not like this child, it's running around, doing everything, breaking things. You now need to start giving that MSME what they actually now need at this point, which is, yes, still a fair bit of TA and market linkages and helping to build their resilience is really what I'm driving at, but also injecting the right sorts of capital. Because we've also seen MSMEs fail because they get too much capital too fast, and that perhaps is a story for another day. So I think we need to understand the graduation. We need to understand that these MSMEs from day 0 to year 7 need different things along the way, and consistently have to keep refining their product development. So when they get to that acceleration stage, the capital will come because they can demonstrate the customer base, they can demonstrate the product, and they can demonstrate the value.
Kim, if you were to get into the SMEs world, which sector of the economy would you focus on?
Very good one. So in my own private enterprise, I consider myself a nano entrepreneur. So in my nano entrepreneur,
what is that?
Smaller than micro.
Yes, smaller than
micro.
So you're smaller than micro.
Yes. So think of me as a sole proprietorship. Let's use that word. So in that business, I rear chicken. And it's very fulfilling watching the chicken running around, but my scale is too small. So that even if I slaughtered all these chicken, I wouldn't even be able to pay the electricity bill. Yeah. So my monthly electricity bill, and that's another story for another day. But each entrepreneur has their own journey. So rather than making a recommendation,
in that case, are you in it for business or for fun?
So that's the point, and I think that's where the heart of the matter is. So I consider myself an entrepreneur, but so does the person who considers themselves an entrepreneur who has 100 chicken, 1,000 chicken, right? So the two of us, if we both go to a financial institution and say, hey, we want a loan, we may both be declined, but if there was a degree of declining, mine would be declined the first one. Yeah. So I think it is, rather than making a recommendation on which sector to go into, because they all have, it's a demand and supply issue. So you remember a few years back we had this phenomenon for quail. So farmers were told, hey, quail is where the market is, and everyone diverted everything and went to quail, and then that collapsed. Similarly, a few years ago, there was no money in coffee, so people uprooted their coffee bushes and put expensive real estate, went into other things, and then now coffee is making a comeback. So I think, aside from thinking about which sector has money, I think we should think about which problem can I solve for which customer. It sounds generic, but ultimately it goes back to the same thing. Like with me as my nano entrepreneur, if I thought of myself as these 3 chicken have to pay the light bill, then my focus has to change. I have to think about either increasing the chicken or reducing the amount of feed I'm giving the chicken, or maybe not have them roaming around everywhere. Let's maybe put them in a battery cage. A shift has to happen for me to actually get to the goals that I want. So I think for the opportunistic entrepreneurs, or for people just starting out in business and they want to make it, we all want to reach those high levels. I think it really starts off with us having an honest and candid conversation about what do we have, what can we do, what does it take, because, you know, like I said, we are in this space right now where there's a lot of attention to entrepreneurship by the government, by the private sector, by donors, and, you know, the digital tools now are making credit accessible, affordable, and convenient. So there's really no need for us to be limited by sector, by, oh, this has money or this other thing doesn't have money. It's a question of how can I add value. For example, with my 3 chicken, if I said, you know, I'm keeping them for beef and I'm keeping them for for chicken, I'm keeping them for meat and I'm keeping them for eggs. How about I just keep layers? That would just give myself a lot more focus and help me scale that business faster. Yeah. So I think it's a question of, you know, entrepreneurs also sometimes in the early stage try to do a lot because you're not sure which will work. So you try 10 things and there's no focus. So then that's what we're talking about, the need for that focus, that dedicated value chain development, that access to business linkages to actually focus and say, okay, I'm going to produce eggs for this market that will be bought at this price, and so this is my cost.
There's also this phenomenon in Kenya whereby a lot of SMEs, you know, they are into copy and paste kind of a business model whereby Kim is doing very well in the poultry business. And so I imagine if I get into it also, you know, I'm also going to make money. I'm going to make some good bucks out of it. Kim has started a boutique in downtown Nairobi and is getting enough customers. And so I, as O'Brien, I just copy that business model and I paste it, hoping that it will work. Is this the case, honestly?
You know, it's an interesting one. It's true, a rising tide does lift all boats. Yeah. So there is a strong advantage actually in copying, because when you think about it, if there are 10 boutiques and I'm the 11th one, I might not struggle to look for people who can run the front office. I can poach from the 10. I might not struggle to find the latest hairstyles. I can see what is happening in the remaining 10. So somehow my cost of doing business has reduced just by replicating what's in the market. But I don't think that's long term. So it will get you in, it might not keep you in. So I think that's the problem. People are coming in because they can see, oh, the cost of entry here is low, let me jump in. But because of lack of diversification, innovation, and a clear value proposition, why should a customer come to boutique number 11 and not boutique number 2? You know, we all suffer because we dilute the market, and then it's not sustainable for any one of us. So I think get in, but think about how you differentiate yourself.
And so for SMEs, before you decide that this is the market that I want to focus on, this is the area that I want to venture into, what are some of the factors that you have to consider?
Yeah, I did a bit of economics in my early days, and for me now, the thing that keeps ringing back to my mind is, what is the cost of doing business and what's your business plan? So I had a conversation with my partner this morning, and we were discussing different business ideas. And, one thing at least I shared with her and said, one thing that it might be important to think about is, what is your route to market? So if you take your capital, if you borrow money or get a loan from an informal money lender or from your indigenous financial service provider, and then go and open up shop and hope that customers will stream in, they don't know you, they don't know your product, that's a tough sell. However, what we're seeing in South Africa and in other places where this is working is people are leveraging more tech, leveraging working from home arrangements, working mainly online on Instagram, Twitter, what have you. And it's a trend that's we're also seeing here. So as a way to get to your customer quickly, lower your cost of entry, and improve your chances of success. So that once you have a stable customer base that might not be giving you full return on investment, but at least it's on its way, then you can open for them a shop. But not necessarily opening a shop to hope the customers will come. And I think sometimes we put the chicken before the egg because we have a prestige on, I want a shop here, and so I put a shop and then I start selling. It really should be, what do people want? How can I get that to them? Is the shop the best way to get that to them, or is there a different way? And it's great to see that we're in this space now where digital is enabling all of these things to come to bear.
And before I let you go, Kim, also help us understand, how then, as an SME, how do you leverage on IT, number one, to drive your business, number two, to make yourself more credit worth, and number three, to remain in business?
Sure. I think to make yourself more credit worth, there are a number of different applications by fintechs, by large commercial players that will allow you to record your sales, that will allow you to keep track of your Chama investments that you're receiving, that will give you a bit of traceability. So when you approach a financial institution, you can show that you have credit history. As well, to get to market, so I came across two very different platforms but are doing the same thing, one in Pangani, one in Pumwani, that are making it possible for even mama mbogas to sell online without even having to know how to code or what is online. So looking at linkages to platforms such as these that can expand your potential to market and your route to market. And then I think, ultimately it goes back to what value are you driving and how are you differentiating yourself. Because if you are the 101th mama mboga, you have it's a blessing and a curse. Blessing because you can innovate, and maybe a curse because you're finding an already established market.
Very good. We're in this conversation of how to make SMEs credit worth, and we're having this conversation with Kim Kariuki. He's a consultant working with Microsave Consultancy.